Good morning, I'm Tim Carter. I'm Client Portfolio Manager on npower's optimisation desk, and welcome to this morning's market update on Tuesday the 10th of February. Prices have opened high but quite volatile this morning, with the main driver being the Dutch decision to cap production from one of their main gas fields at Groningen amid increased seismic activity in the region. The gas system in the UK is also undersupplied as CCGT demand has picked up today, while the situation in Ukraine is also tense, with quadrilateral peace talks due to take place in Minsk tomorrow. Well, those are the main headlines, but if you have any more questions, please contact us on the email address provided, or alternatively continue to watch for a bit more detail. As I said, the major headline in the gas market today actually came out yesterday afternoon, pushing up closing prices and leading to a firm start this morning. The Dutch government actually announced a 26 BCM per year reduction in the production at Groningen, which was much greater than widely expected. Although this doesn't have a big impact during the current mild weather, it will have a much bigger impact on next winter, justifying a wider summer-winter price spread. The gas system in the UK is also short this morning because of the CCGT demand picking up to over 45 MCM, keeping overall demand 30 MCM above seasonal normal levels. The power system in the UK is still well supplied, despite wind generation below 1 gigawatt today, with peak margins forecast at just under 12 gigawatts. The French interconnectors are still not importing, with morning peaks over there still just over 5 gigawatts this morning. CCGT is again the dominant fuel source, but the recent shift up in gas prices could encourage the balance back towards coal generation. Oil, coal and carbon markets are relatively stable against the backdrop of increasing concerns over the war in Ukraine, with the US now considering sending lethal weapons to the Ukrainian government, although European leaders are keen to secure a revised peace plan focused around a demilitarized zone along the current front line. The impact on prices has been quite pronounced on both power and gas, with decent swings already this morning. The markets are clearly struggling to understand exactly what the impact of Groningen's production cap is. The March 15 gas contract is now trading at 50.2 pence per therm. That's over 3 pence up from the same time yesterday, while the equivalent power contract is yet to trade, but the middle of the spread is more than £2 per megawatt up on yesterday's opening prices at around £41.85 per megawatt hour now. The summer 15 contracts are also well up on the gas side at just over 47.5 pence per therm, and power is yet to trade, has already traded at 44.50. The winter power contract is also now trading over £49 per megawatt hour, a shift in the market from yesterday of nearly £2 per megawatt. That's it for this morning, and speak to you again tomorrow.